Good morning, everyone, and welcome to the first iteration, little increment here of the boot camp. What we're going to talk about in this first little section here is the vehicles in which we are going to be trading. So that's Nadex, which the bulk of you are aware and have used, futures, forex, and options. We're going to talk about capital investment for each, and really um, where best to utilize each of these vehicles is for everyone's unique situation. So what I want to do is I want to run through the benefits and kind of how I plan to help you implement uh, each of these different vehicles. And then there's going to be some homework. We're not going to get this first week isn't going to be too much of a deep dive into anything technical. We're going to talk about planning, not planning trades, but planning your particular um, planning your particular uh, I'm searching for the word. Planning your particular plan, really moving forward, and how you plan to implement, and then we're gonna assess how that evolves over the course of the boot camp, and at the end, um, then we'll put everything into practice, and you can see what works best for you if things have changed, and then that'll help identify where your strengths and weaknesses are in whichever path you choose, and um, we can dive into our individualized content that's going to be going out. So to start, um, here is what I recommend in terms of brokers that you use. So Nadex, obviously, that's the only binary options broker that I would recommend. For futures, Tradeovate and NinjaTrader. Um, there are pros and cons to each. Tradeovate is gives you a good web platform to work with. Um, but if you find yourself trading overnight or want to trade the forex indices, so like the 6J and 6Y, so the sorry, not 6J and 6Y, 6J and 6E, so like the euro futures and the yen futures, which is essentially like trading the dollar yen and the euro dollar. Then you're going to want to go with NinjaTrader because of margin requirements that we'll get into um, pertaining to the overnight session. Um, then Oanda and TD Ameritrade uh, for forex. There are a lot of reasons uh, to look into forex, and one of the bigger reasons that a lot of people do look into forex is the if you do it with kind of a bucket shop, it will be the lowest cost of entry that you could possibly have for trading. Um, I don't have any real personal experience with those other brokers outside of Oanda because that's what I use. But I know there are a lot of people that use a broker called Trader's Way. It gives you tremendous leverage. I think it's like 1 to 1,000 leverage. We'll get into what that means, but it can be very dangerous. So, and it also being overseas to get around those CFTC regulations, it can be difficult to get your money out of those because they're not regulated. And that's why I go with the Wanda. It's in Canada. It's regulated there, um, and it abides by the CFTC regulations and is recognized by them. TD Ameritrade, pretty well known. They own Thinkorswim, so it becomes very seamless if you want to execute all through the same thing or through the same platform. But the cost of entry on TD is very high. So let's talk about, now that we've identified the individual brokers, let's talk about the benefits and how the plan is going to take shape for each of these. So Nadex binary options. Now, what's this good for? Well, it's good for a number of things, and really it's something that I feel that no matter which path you choose to focus on, it's a place that you should still leverage. You won't find better leverage for your money on a regulated platform than Nadex. You won't find um, a better cost efficient system to start trading that's still regulated and be able to see decent returns than Nadex. Um, a lot of people approach Nadex with the mindset of what BTG teaches. BTG being binary trade group, for those of you unaware, um, which is you want to trade where the market doesn't want to go. Well, that's 100% true. But the problem that a lot of people have with trading that way is that you're risking a lot, roughly $75 to make $25. Now that's all well and good if you can hit like 99% of your trades or even 90% of your trades, but one loss can wipe out a substantial chunk of your winnings. And so it becomes difficult to sustain when you're doing it that way. But when you're trading from movement and you're leveraging your money and compounding it on by either spreads or at the money or out of the money trades, you limit your capital investment. You you really leverage the ability to double your money, really, and to make substantial gains with a low cost investment. So I think that the minimum you can deposit for an 8X is $250. You can see great weeks with $250. I personally know someone that when they were still trading Nadex, they only do spot forex now, and I've tried to convince him time and time again to get back into Nadex. Um, I personally know someone that trading two or three contracts at the money trades, couple trades a day, was able to pull off a $1,200 week, and his investment was like $300. And so it's a pretty tremendous return on your capital if you can learn to leverage it properly. So that is something that I encourage you all to never let go of is Nadex. Trade of 8 and Thinkers, not Trade of 8 and Ninja Trader. This is where we get into the world of futures. Now, a big myth with futures is that you have to have a minimum of a $25,000 investment in order to partake. If you want to be truly safe and abide by kind of proper risk management, that's 100% true. But if you don't, if you dismiss that and you're a smart trader and you know how to mitigate your risk, then that's not true. And you can buy into futures and trade futures with a 2,000, I think $2,000 for these two brokers is the minimum that that you can fund an account with. That will allow you. You'll be You'll be carrying roughly when you're trading intraday $500 margin per contract per CME exchange. So, for instance, if you were to trade one contract on the S&P, you would need $500 worth of margin to open up available to open up that one contract. Now, we'll get into what margin means in a bit, but you can mitigate your total risk with proper risk management by including a stop loss that automatically opens as you enter a trade, which is part of the reason why I often prefer and recommend Ninja Trader. Ninja Trader will allow you to open up each trade with a stop loss already assigned. So as soon as you execute a trade uh, and open up your position, then you will open that position with, for me, I use a 2 point stop loss on ES. Now, to put that into perspective um, with the way that price moves on futures, we'll stick with ES. With Nadex, it's you're very reliant with a binary. You're very reliant on the Greeks. Time decay, as you know, time dwindles down. P&L moves much quicker. Well, with forex and futures, it's a very straightforward um, per tick P&L movement. So for the S&P, it's going to there are 4 ticks per point, and it's going to move at $12.50 per contract per tick. So with one contract, it's going to move at $50 a point. Now, that's a lot of numbers thrown around in a short amount of time, but as you practice it and see P&L move, you'll that'll start to make more sense. So think about if you put a $2,000 investment into a NinjaTrader account and you were to start trading safely and have trade, let's say you were only trading the S&P for the first couple of months. Um, the S&P I've seen move, yesterday was a pretty significant day, or this week it's moved, maybe like 15 points in a given day. I've seen it move more, I've seen it move much less, but let's just take a hypothetical trade with the S&P where we have a 1 to 5 risk to reward in that we have a 2 point stop loss and a 10 point profit target. Well, price opens up and we're trading one contract to stick within our appropriate risk for a $2,000 account. We're trading one contract, and that's all we'll have open on any trades, so any index. So we'll open up with a one contract trade on the S&P. We have a 2 point stop loss, so our risk is $100 total. Um, and if we have a 10 point profit target, then we have a let's see, so we have a $500. It's a 1 to 5 risk to reward, so $100 risk with the 2 point stop loss, and we have a $500 potential gain. So what this allows you to do is, first of all, mitigate your risk and preserve a $2,000 account. But also, when you move into profit, let's say 2 points. So we've already broken and gotten a 1 to 1 risk to reward. So we move into profit 2 points. We're up $100. Now we can pull our stop loss to break even, and it becomes entirely risk free, which is something that you can't really do on binary options. And it's something that you can't do as well in terms of intraday trading on Forex. And we'll get into why in just a minute. But well, we'll get into why just now, because the spread is not variable. So the spread is very, very tight on futures because it is the most regulated, other than like traditional stocks or options, it is the most regulated uh, market to trade is traditional futures. So you will never have more than like a 10 to 25 cent spread, whereas with Forex, you at any point in time could have a 5 pip spread, a 10 pip spread, a 100 pip spread, because it's variable. So as volatility picks up, your spread is going to go, substantially higher or lower. Now, that variable nature doesn't happen with futures. So when we move 2 points into profit, that's a substantial gap. So we can pull our stop to break even and sit comfortably knowing that the spread isn't going to widen and stop us out. Um, so then from there, you can manage your trade as price moves in your favor, and you've already achieved 1 to 1 risk to reward. At the very least, you're going to get stopped out for net zero, meaning you're just gonna walk out paying commissions, which for NinjaTrader is, I believe, 73. Depending on which option you choose, it's 73 cents round trip per contract, or I'm sorry, 73 cents one-sided per contract. So roughly $1.50 commissions per contract per round trip trade. Um, Now, as we alluded to with Forex, um, it's a low cost of entry if you choose it to be. And again, I can't speak to personal experience, but I understand the appeal. So let's say that you use Trader's Way. Let's say that you use one of those high leverage accounts. Well, you can deposit $100 and uh, you can trade like a 10-cent lot, so zero point 0.1 lots. Now, the way that pip calculations will work is if you trade a standard lot, it's so 1.0, it's going to move 10 micro pips is going to be $100. Or I'm sorry, 10 pips is going to be $100. If you're trading a 10-cent lot, it's going to move dollar for dollar. So 10 pips is going to be $10. Um, sorry, I think I messed that up. We'll have a better pip breakdown. I'm going to have a P&L breakdown chart that I'm going to share with you all. But what I wanted to get to was the the cost of entry for forex can be low. With Oanda, you have 1 to 50 leverage, which is the maximum amount that the CFTC will allow. So what that means is that you can trade 50 times your account size um, with per $1. So with $100, you'd roughly be trading about a $500 account, give or take. Now we'll get into a bit more of the pitfalls of that. You can imagine that with Trader's Way and you're trading 1 to 1,000, it becomes very dangerous because the margin levels or the margin call levels, so the stop out levels where they have the ability to liquidate all of your positions is very it isn't forgiving. So you may be trading with 1 to 1,000, but if your entry is not precise, price is going to move you very quickly. And if you over leverage your lot size, then you're going to get stopped out fairly quickly. But it's the lowest cost of entry. There's no time barrier with futures. Well, there is a time barrier with futures in the sense that if you carry your if you're trading with a $2,000 account, you will not be able to trade through a maintenance session, which means that um, after 5 o'clock, or each broker is variable depending on when this is, but there's essentially an hour and a half where the exchange shuts down, and if you were to carry a trade into that maintenance session, you would need to carry the maintenance margin rather than the intraday margin. The intraday margin is $500 per contract per CME trade that you have. The maintenance margin jumps to between $4,500 and $5,500 per contract. So if you were holding an ES trade going into the market close and you wanted to hold it into the Globex session overnight, you better make sure that you have at least 6 grand in your account to cover that. Um, and if you're negative, then your equity is going to dip into, what your allotted margin is. So just make sure that you're planning for it. As we dive into futures itself, we'll cover more of that. So that's where the time barrier comes. With Forex, there's no time barrier. There's no variable margin. So it's always the same margin. You're going to pay a swap fee, which is essentially interest for carrying a position overnight during the session changeover. Um, and the swap can either work one of two ways, right? If it's and this will be in that P&L movement chart. The swap fee is going to be interest variable based off of your position size, and it could either be paid to you if it's positive interest, or if they're taking interest, then you would pay them. It can, if you're trading a standard lot, it could be up to around like $5 to $15. If you're trading smaller than that, it's fairly negligible if you're trading longer time frames. Um, and that's really where we're going to focus with with forex. Is a lot of people will trade 5-10 pip scalps. That's not sustainable because you're going to be paying commissions, um, you're going to be paying swap fees, and the spread is variable. So if you have like a 5 pip spread, a 10 pip trade is really going to be a 5 pip trade. um, so it becomes a challenge to make that sustainable. So what we're going to be looking for uh, in terms of trades for forex is anywhere between like 35 to a couple hundred pip trades, and even longer if that's the type of trader you are. It's going to be a lot more set and forget it. With options, so options are a fantastic instrument to leverage money that without getting into all of the pattern day trader rules and trading with a smaller account, because with trading traditional stocks, you're going to be very handcuffed unless you have a $25,000 account. Because of the pattern day trader rule, which is that you can't make more than 3 day trades in a rolling 24-hour period, I believe. Now, on top of that, with stocks, it takes 3 days for your funds to settle. So let's say that you make a day trade. Let's say that you buy Apple at $70 and you sell the Apple at uh, $78. Let's say that you put like 20 shares on that. And so you made about 160 bucks. Well, that $160 is going to take 3 days to be tradable, um, including the amount that you put up for it. So your buying power is going to take a hit immediately, and then that's going to get withdrawn from your account and removed, and then and put into your shares. So your equity is going to increase. But then when you sell it back for profit, um, it takes 3 days for your buying power plus the equity you built to become available to be tradable for you again. With options, it's a 1 day turnaround. Um, so it's a T1 settlement, so you can make the trade, and then the next trading day it'll be available to you. It doesn't work that well with intraday stuff. If you want to take multiple options trades a day, which is why you want to budget for having a larger than any of the other four up here. You want to have a larger investment amount. So I would recommend between $5,000 and $10,000 if you're going to be doing options. Um, and so I know there was some interest with options. I think it might be worthwhile to take another poll, knowing what it does take for options in order to make a significant dent, if we want to spend any time on that. But that's a brief overview of kind of the capital investment and the requirements that you need to be mindful of trading options, binary options with Nadex, forex, and futures. I would very much like to get a sense of the group on what you think initial um, your initial desire is to trade during the course. Each and every one of you is going to participate um, in each and every one of these disciplines. We're not going to just limit you to um, we're not going to just limit you to a specific, what you decide you want to trade right from the get-go. You're not going to just work on that throughout the boot camp. You're going to learn the ins and outs of each and every one of them, because that'll help you as a trader overall. And if there's nothing like, I want you to have a tool belt essentially, because if nothing's happening on futures, it's a low volatility time, and you really can't capitalize on the S&P. We'll just and it's just range trading. Well, then Nadex is going to be great for you, because you don't need as much movement to profit, and you just need a binary statement to be true. Um, let's say that there's a couple of months of super high volatility, and you don't feel comfortable trying to leverage Nadex at the monies, and instead you want to trade out of the monies, but you can't leverage the higher time frame volatility. Well, that's where something like forex is going to become essential to you, because then you can just set it and forget it and walk away. And for instance, the pound yen has been retracing after a significant couple months run down. I don't have a chart in front of me, but um, it 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 tanked, and then it's now been retracing for about a month, slowly. But that significant volatility that was in those last couple of months would have been fantastic to capitalize on. Um, so there's give and take to each, and really what I'd love to see for all of you is at the end of this course, you are well versed in everything and have at least two, hopefully three, that you are trading fluently on. Um, and so what I'll ask is that right now, don't open any demos because a lot of them are limited in a time frame in which you keep them open, like they're 2-week demos. There is a little hack that I pulled from Sean, where he mentioned you could use Mailinator, which is just like public inboxes that get purged. So it never keeps any emails older than a day, but you can leverage just you can create any inbox you want and then sign up with various brokers and leverage that. So eventually we'll walk through that and get there. But for a first homework assignment, I know that during the introductions um, you've all kind of spoken a little bit to how you want to trade, but I would very much appreciate if after I post this on this post, if you could comment on what your number one and number two um, uh, what planned trading vehicles are. So if it's futures and forex, if it's Nadex and futures, if it's Nadex and Nadex and forex, if it's Nadex and options, if it's futures and options, any combination of the two, I don't care. I just want to know initially where you think you're going to be leaning, and then how to, and then we'll track that as we progress through and see if your tune changes or if you want to keep those two but implement the third. So brief introduction. Um, Please comment onto the post with what you think you're going to be doing, and keep an eye out for the next video coming shortly.